Hi, I'm Neil Winward, CEO of Dakota Ridge Capital. At Dakota Ridge, we help developers and investors in clean energy projects to monetize the advantages available to them from the Inflation Reduction Act. The Inflation Reduction Act that was enacted under the Biden administration introduced a new concept into the realm of financing clean energy projects, and that was a tax credit purchase. The tax credit purchase, as you can see from the chart behind me, is a key plank of the Inflation Reduction Act, enabling value from clean energy projects to move from developers to investors, courtesy of the federal government. So, one of the key concepts that emerged from the tax credit purchase area is how investors are going to get comfortable with purchasing tax credits. And in order to bring a whole new category of investors into that space, namely corporate investors, it needed to make it really simple. And the mechanism that made this really simple is tax insurance. Tax insurance exists to give developers an easy mechanism to move value from them and the projects and the tax credits that those projects generate to investors, purchasers of those credits with minimal risk. And the we'll go into the risks in a second, but let's first of all look at the two primary credits that change hands between developers and investors. The first is the investment tax credit that is based on the value of the project being brought into service, and it has a base level of 30%, which can be increased by different elements related to domestic production and certain economic zones designated in the country. And the second type of credit is the production tax credit that is based, as the name suggests, on the amount of energy that is produced by a credit. Production credits are generated on an ongoing basis during the period that the project is in service, whereas the investment tax credit exists and is brought to life the moment that project generates energy and that energy hits the grid. So there are really two kinds of risk that tax insurance is designed to address. The first is basis risk. Basis risk is attaching to the actual value of the project. In other words, if the project it cost $80 to build and was appraised at a value of 100, and that value of 100 is the basis of the investment tax credit. So on a project valued at 100, a 30% investment tax credit would generate a credit of 30. That is the basis that the investor is relying on in order to claim their credit. And there are certain instances in which the IRS might challenge that basis. They might say your 100 is not a good value. We think the only value that's relevant for us is the 80, the cost of constructing that project. That risk is not something that an investor in the project, a purchaser of the tax credit, wants to take. So the developer will obtain tax insurance to guarantee for the investor that they won't have to worry about the value of that project. So once they've purchased a credit of 30, they will be assured that they will get that value on their tax return. The second risk that investors want comfort on is recapture risk, and that relates solely to investment tax credits, because although those credits are awarded as soon as the project hits the grid, and that's the point of time in which the investor is enabled to take that credit on their tax return, it is considered to be earned over 5 years by the IRS. So there are certain risks that a project may not stay in service for 5 years. The project may have a casualty event. It may be sold to a third party in a way that contravenes the terms on which the credit sale took place. And in that case, the IRS may come back to the taxpayer and claw back a percentage of that credit. So if the project was experienced a casualty event after year one, the IRS would consider it only to have earned 20% of that credit, and so would claim back the other 80%. Again, that is not a risk that a purchaser of the credit wants to take, so they obtain tax insurance for that. It's that the concepts are reasonably straightforward. Their implementation needs to be carefully thought through, and for a further discussion of that, I encourage you to go to the website www.dakotaridgecapital.com and book a call with me, and we can go into as much detail as you need.